Karie. What are you up to?
I am just working and busy all day. I'm so excited that you're on here with us today. This is Ashley Mckenzie Sharpe from Highlands Mortgage. We are so excited that she's here today, and she is going to talk about all about the market and everything that's going on. But first, thing, what's been going on with
Not
you?
much. Been busy. There's a
Yeah,
lot of people out there that are kind of like getting pre-approved and whatnot and kind of starting that search. I think everybody's kind of feeling like rates are going to fall, so I think that a lot of people are that angst is built up. So
yeah,
I think it's going
yeah.
to be good.
For sure. No, that's one of the things we're going to talk about today. But one question I have is, how have you been doing? What fun stuff do you have on board?
Fun stuff. I mean, I'm sure Birkin and I will go take some hikes, working out, hanging out with
Yeah.
family, just the standard stuff. Nothing fancy,
Mhm.
coming up
Yeah.
anytime soon.
Yeah.
How about you?
Have you been
Vacations?
what?
I said, how about you? Any vacations?
Yeah. Maybe. Yeah, I might go to Florida soon. Maybe soon if I have time. Yeah, for a few days.
Yes.
So, have you been riding any Peloton lately?
I've been doing it pretty consistently.
Yeah. Oh,
Not
good.
every day, but
Good.
at least probably 4 or 5 days a week.
Oh, good. That's excellent. I've been running more, so I haven't been on the bike that much, but I still ride. So down to business. What we're going to talk about today, right, is the state of the market, pretty much. Like, where are we at? What's going on? Where do you see things going? Do you think interest rates are going to drop? We're going to talk about all of that kind of stuff. So let's get started on that.
Let's go.
Okay. So what do you see in the market? Because you're on the other side.
Yeah, I mean, I feel like I said, the market's starting to, people are kind of feeling like rates might come down. I know there's a lot on the news.
Yeah.
I do feel like, based on unemployment and inflation, all that we're hearing, I feel like they're probably going to cut in September. I think we'll see that first cut, which will start to lead rates down. It's not going to be an instant like, hey, we're in the fours. That's not what we're going to be looking at. But if we just move down into the low sixes, high fives, that's going to be a huge lift for a lot of people. And with that drop in rate, that is going to take everybody that's on the bench and they're going to get right back into the game. So I think we'll go from where I feel like right now we're kind of in a buyer's market where we've been in a seller's market for so many years. I feel like the buyers kind of have a leg up right now. They're able to negotiate a little bit on the purchase price, on seller concessions, things like that. What do you
Yeah.
think?
Well, I think if the house is priced correctly, we're not seeing a buyer's market still. But on the other houses that are sitting, yeah, I would say that we are able to do a little bit of concessions, not a lot, and a little bit of repairs. In the price, we can, budge on the price a little bit, but not that much. I list a lot of properties, and so if they're listed correctly, I mean, we're still seeing multiple offers or, good offers.
That's good. That's good.
Yeah, not complaining, happy.
I think that's the key though, is get
Yeah,
with the right agent and list the home at the correct price. Don't be
yes,
greedy.
yeah. Listing it at the right price, you're going to make more in the long run.
Definitely.
Yeah, excellent. So in September, you think, what kind of interest rate I mean, like, I know you can't, predict per se, or like, but do you think it'll be like a point, or do you think, what kind of drops do you think?
I
Half a
mean,
point?
I think we'll probably see a quarter to a half. I don't know
Oh,
that we're
okay.
going to see a whole point.
Well, I'm trying to
I
be.
wish. I'm here for it if it happens, yes. But I think we'll probably see more of a quarter to a half.
Okay.
Somewhere in that range.
Okay. Excellent.
But still, it's going to be awesome.
Yeah. Well, gives them so much more buying power. So yeah. I definitely think as the rates go down, I think that more buyers will jump back in, because I know we have a lot on the sidelines right now. I mean, at least I do. I know I've got a ton. So I think that'll be helpful. What else are you seeing in the market? Because you're on the other side, and I know that you see how many applications you're seeing, or just everything about the market.
I mean, I think that I'm seeing more people being willing to make that move. I feel like people kind of got stuck during COVID. They were holding on to their homes. They weren't willing to give up that low rate that they're locked into. And I see more people saying, okay, it's time. I'm ready to go on and let go of the big house and downsize. And so it's really adding to the market and allowing us to have a little more inventory so people have more options. And I feel like we're going in the right direction.
Okay, good. I feel like when the rates drop though, again, it's going to pick up and we're going to lose inventory. But
Yes.
I mean, it's a good thing, but
Yeah.
I mean, it's all a good thing. So in the, where do you see it going in the next 6 months or 9 months?
We're going to be back in, probably really low sixes, high fives, mid fives, somewhere in that range.
Okay.
So I think the rates are going to be really competitive. I think we're going to see not only purchases pick up, but we've got a lot of clients that in the last probably 12 to 18 months have locked in at rates in the sevens. All of those clients are probably going to want to go on and refinance into the fives. We've seen that. So we're probably going to see, a pickup in both refinances and purchases. And I think that'll also, free up some cash for people because that's
Yeah.
something that I see that a lot of people are struggling with right now. I mean, you've got taxes and insurance increasing across the board. You've got
Yeah.
debt, credit card debt is at an all-time high. So I think that once we get into that place where the rates drop, we'll see some people do some cash out refinances or actually sell, take that equity, consolidate, and then, go on and move into the new property. So I think there's going to be some good times ahead.
Excellent. Now, do you, what's your thoughts with what products? What is your thoughts with like what are the best products for all these folks right now?
If it's not as competitive of a property,
Mhm.
then I still think FHA, VA, those are still, kind of rule the roost, especially FHA. I feel like there's a lot of people who are utilizing that program right now.
Yeah.
And then for those that maybe have a higher credit score, more to put down, conventional is the way to go. And we know that that's going to always be a stronger offer, right?
Yeah.
Conventional,
Totally.
30-year, 15-year fixed. That's going to be an offer that the sellers are really going to look at favorably. Also, we're using a lot of down payment assistance. So
Okay.
the North Carolina Housing Program through the state, they give you $15,000 that you can use towards your down payment as a first-time home buyer. So that is being utilized on a large scale. There's a lot of people who are tapping into that money to help pay for down payment and closing costs.
Oh, nice. Now I've heard, now it might be, I might have heard incorrectly, but have they increased the maximum wage for that, or am I?
They have.
Okay.
They've increased it across the board. For Forsyth County, don't quote me on that. I think it's somewhere like 95 to 98 now for a family of 1 to 2, and then for a family of 3 or more, I think it's gone up to 115.
Oh, nice.
115,000 in income. So that's a really nice, substantial sum that you can make and still qualify for this program.
Yeah, and that's what I heard. So I'm glad you confirmed that because I'm not sure where I read it, but I was like, oh, that's so good because it knocked so many people out before. And I was like, man, you're like right over that. So that's amazing.
People. Yes.
Fabulous. I know you help a lot of new construction. What are you seeing on that market? Because I know you do a lot of lending for them.
I think that new construction's up. They seem to be really, really busy. I think a lot of people are drawn to, the newness of the home. Everything's under warranty, those types of things. I think that really helps people, move towards the new construction. Also, a lot of these builders are offering these really super low rates. So, they've bought things down for the buyer. They're paying their closing costs. They're giving them these super low rates. I know I'm partnered with a builder right now where they're offering 4.99. And
wow.
I mean, yeah, that's huge. I mean,
That's
it makes a huge difference in a payment. When you're looking at a $300,000, $400,000, $500,000 house, I mean, you're talking about hundreds of dollars a month. So it's really a big pickup to go with the builder.
That's amazing. So we've talked about the market and so on. So what pointers would you give a buyer? And what is the do's and don'ts for any new buyer or second time buyer?
Okay. First and foremost, I think
Yeah.
every single person out there, look, we're in an election year, right?
Yeah.
Everyone needs to go to optoutprescreen.com and sign themselves up. It's free. It takes 2 seconds, and that will keep you from being solicited by
Oh, okay.
all of the people.
Yeah.
It also is a great first step before you go out and search for a mortgage because it actually opts you out of receiving all of the phone calls that you receive when you get your credit pulled. Um,
Okay.
that's a big thing. I mean, you get
That's
your credit
gigantic.
pulled, and you can have hundreds of lenders all of a sudden, call you because
Yeah.
the actual credit bureau sells your information. And so all of these, crazy lenders buy that and they reach out, and a lot of people get really overwhelmed with just that little piece.
Yeah.
So optoutprescreen.com, do that first.
Okay.
And then the other thing that I would say do first is buy your home before your car.
Yeah.
There's so many people buy these vehicles, and vehicle payments, I'm going to show my age, but I mean, they used to be $100, $200 a month.
Yeah.
Now to buy a car, you're talking about $700, $800, $900,
Yep.
$1,000 a month. I mean, these car payments are massive.
They're
So
outrageous.
they are outrageous. So if you really want to look at purchasing a home and you're
Uh-huh.
in the market and your car's close but not completely out of driving,
Yeah.
keep driving that car, get pre-qualified, buy your house, and
Yeah.
then qualify for your car because the vehicle loans are so much easier to qualify for. They don't have the same stringent requirements that a mortgage is going to require. So
Yeah.
definitely, that's a big one.
And doesn't it take like, I can't remember what I've read or heard, but one car loan, what does it ruin? Like it, because it lowers your buying power. Like,
Lower it. It depends on how high it is. I mean, I have
okay.
some people that have like $1,500 car payments.
Yeah.
I mean, that can literally be a matter of $200,000, $300,000 in
Yeah.
purchase power. I mean, it's a lot. That's the
Yeah.
reason why I'm like, if you have your car paid off and you want to buy a home before you buy that new car. It
Yeah.
really will allow you to qualify for the house that you really want. And house is an appreciating asset, whereas a vehicle
Is depreciating. Yeah, for sure. I agree with that. Yeah, that's always my number one thing I let every buyer know. Please don't buy anything. Don't buy a car. Don't buy any furniture. Just don't buy anything till we're done.
don't do it. And I mean, the other thing is like, there's a lot of people that seem to be kind of in the job market right now. You really want to stay put. If you've been at your job for a while, stay put, buy your house, and then make that move.
Okay.
If you transition to self-employment in the middle of this process, and you don't have a 2-year history of being self-employed, filing a Schedule C in those 2 years of tax returns, you are not going to qualify for a mortgage.
Yeah. Okay.
Period.
That's good to know.
It's really, really difficult. So
Yeah.
don't go from a W-2 position over to a Schedule C or some type of 1099 position.
Yeah.
Buy your house and then, take that contractor position or whatever that looks like.
Yeah.
And if you are self-employed, I think anyone who is self-employed should reach out sooner rather than later because it takes a little more time and we can work with you on the numbers. There's lots of different options now. So if you've had 2 years of self-employment, and I know we'll talk about this, another time in more depth, but I mean, there's a lot of options for bank statement loans and, debt service loans, things where you can get around tax returns and still qualify as self-employed.
So now, are those rates? Is there any difference rates with those kind of loans, or are they still competitive?
They're a little bit higher. They definitely
Okay.
are. But
Yeah.
I mean, I would say for the average, like the DSCR loan,
Mhm.
probably in the sevens, which
Oh, okay.
so it's not horrible. It's not frightening. And as the rates drop, now all of a sudden they'll be in the sixes and that's so so on and so forth. And
Yeah.
if you get more established and you decide you're going to show a little more income in the future, we can also bet on refinancing here in the next 12 to 24 months and get you out of that, 7%.
Yeah. Yeah, for sure. I
Lots
totally
of
get that.
good things.
Yeah, yeah, definitely. Any other pointers for a buyer and a first time buyer? Either one. Just regular.
Save your
Save.
money.
Yeah.
I mean,
Save as much as you can, right?
yeah, I mean, I do have nothing saved.
Uh-huh.
I have a lot of clients who come in, they have nothing saved. They are not able to pay for their appraisal, their inspections. There's earnest money, there's due diligence.
Yeah.
You do need to have, I mean, there is down payment assistance programs, but that's not going to help you with the upfront cost. You need to
No.
have a savings. It does cost something to move
Yeah.
and relocate to another property and get the power on and the cable and all the things. You need to have some reserves there. Be
Yeah.
prepared. Don't
Yeah.
come to the table with $0 and 0 cents
Yeah.
and expect to purchase immediately.
Well, and even in that, if the house is listed correctly, we're still seeing multiple offers. So you still are going to have competitive due diligence in some of these houses
Yes.
at certain price points because we just don't have enough houses on the market. I mean, it just kind of is what it is. I mean, I think I had one house go under contract recently and it was very competitive. And I think it was a $10,000 due diligence. I mean, so, I
It's a
mean, it's
lot of
not,
money.
yeah, it is. It's not often, but oh, and I had another one that was 5,000. So it's not that it's always, but with every house, but we're still seeing it. So I agree. Saving is
Yeah.
good. Yeah. Any other last pointers for a buyer?
I think that, once you get pre-approved, the key is really to stay the course, stay in it, work with your real estate agent. I think it's really fun when I get to work with someone who's local. It
Yeah.
really helps and makes the process smooth. We know the local attorneys. We work really well with them. We communicate well together. So if there's an issue or there's something that, may potentially become an issue, we can like literally nip that in the bud quickly because we communicate so well.
Yeah.
And I think that that's something that a lot of people discount, and they say, well, we're just going to go to Rocket or whatever, these online lenders. Check out your local lenders. The rates are super competitive. We compete with these guys all day long, and you're going to have a better experience.
Yeah, definitely. And it is so much more helpful if you have a local lender when you're with some of these competitive offers. I mean, they're going to look at it and be like, okay, this lender can close this. I have no idea. If it's some random lender that's an online lender, they'll definitely question it. So I agree with you completely. So it's so much more competitive when you have a local lender. Definitely. Well, I appreciate everything that we went over today. All of Ashley's information is going to be in the chat below. So don't worry about that. If anybody has any questions, like I said, we'll have all the information in the chat so you can reach out to Ashley local anytime. And anything you need, I know that she's there and her team's here to help you. Ashley, I appreciate so much all your
Thank you.
time today. And I hope we get to chat again soon.
I do too. Thank you for having me.
Yeah. Yeah. I love it. I love it. And hopefully I get to hear some stories about these hikes with your dogs. And we can ride soon again.
We'll ride together soon.
Yeah. Yeah. Excellent. Definitely. Perfect. Well, thank you again. And everyone again, thank you guys also for turning in. And we will put all of Ashley's information in the text. And if you have any questions, reach out to me as well. Do you want to, can you stop it?